Testing audio 1, 2, 3. Testing audio 1, 2, 3. Can everybody hear me and see the disclaimer? So I've not gone through the disclaimer yet, right? Need to do it? Okay, let's knock the disclaimer up. All communications for Viper Trading Systems are for educational purposes only. Futures trading does involve risk and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. Most excellent. All right, this is the part 2 of the two-part series of Maximizing Gains, Minimizing Trades series, in which we talk about, but before we get started with that, let me get over to the charts and ask you, everyone in here, the whole team, we got a great turnout here tonight. Let me get over to screen 1 and show some charts. My mic has a little static. I might have the fan on me a little bit here. How's that? Is that better? Audio's garbled. I think I had a fan. I think the fan was on me. Here, let me turn the fan away from me here a little bit. Is that better? Yeah, that should be better. I think the fan was blowing on me. It's a little warm out today. Yeah, so we should do better here. Let's see, where were we? Oh, yeah. So what was our homework? What were we all supposed to do last week? And I'm going to see, in all honesty, a show of hands for everybody that actually did it. What were you supposed to do last week that we all did a pinky swear? Remember? All of you that were in here, the pinky swear? I remember it. What were you going to do? And how many of you actually did it? Excuse me, show of hands. Show of hands. No, it wasn't no thrust trading. That wasn't it. Some of you are getting it. Pick your nose with your pinky. Come on, Robert. That's horrible. No, it's not got nothing to do with mid-band. Well, that was part of it. Okay, that was part. I'll give you part of that. You were supposed to trade mid-band trades only for 1 week, just for the heck of it, to see if you could get that down. So that I'm going to count that as check mark 1. Yes, that was one of the things to do. Mid-band trades only for 1 week. Remember? Okay. What was the second part that was equally or is well, yeah, okay. I'll give you credit there, Ben. No thrust trading. Good. Okay. So there's 2. But what was the most important thing that we were supposed to do, and how many of you did it? Let me remind you, because it's looking like 95% of you didn't do it. That's okay. If you don't want to improve your trading, don't do it. That's cool with me. It's your trading account. So let's go back here and remind everybody what that was supposed to be. What you were supposed to do. Okay, wait a minute. We're getting some people who did it. Account performance. Ven did it. Okay, let's give credit where credit's due. Who did account performance? Who did it? Lewis did it. Greg did it. Mario looks like he did it. Brian did it. Ven, Paul, Lewis, Dennis. Good. Good. So this is what you were supposed to do. You were supposed to go into your trading accounts using the account analyzer. So just to back up for a second, what you were going to do was you were going to take mid-band trades only. You were going to try different instruments. You were going to try, throughout the course of the morning to minimize your trades and maximize your gains. And then you were going to run the account analyzer. And the account analyzer looks like this. Everybody should do this. Every single person here tonight and everybody listening on this recording has to do this. If you are going to succeed in trading, you've got to know how you're doing. And I'd venture to say probably, I can't have a direct statistic on this, but I'd venture to bet 75, 80+% of you and other traders never do this. And it's probably one of the most important things for you to do is to track your performance. Let me show you how you can do this. Here's what you want to do, and it is so simple. And if you aren't doing it and you want to start it tomorrow or Monday, that's perfectly cool. That is absolutely perfectly cool. It's all good. It's not like you excuse me. You can start anytime. Okay, you can start anytime. There's no like penalties or anything for not doing it. But going forward, you're going to really want to do it. So here's what you want to do. No, 85% don't do it. And that's one of the problems. Yeah. I'm betting most of the people, the traders I talk to, have first of all, they don't know to do it. And even if they know to do it, they don't do it. Okay, let me show you what you want to do. Here's what you want to do. There's a little thing in here under Tools, Options, Simulator. Okay, this is really super important. Here's what you want to do tonight. Okay, here's what you want to do. You want to go into Account, and you want to create a number of different accounts. Okay. Right now, probably I would venture to say that you probably just have Sim 101 and maybe Replay. And if you have a Combine or a live account, you're logged into that. So maybe you got 2 or 3, Sim plus maybe one other. You don't want to do that. You want to segregate all your trades into different Sim accounts. And here's how you do it. You take an ES and you type in ES. If you trade ES, right, and you hit Save. I already have an ES, so I'm not going to do it. Okay, you trade YM. Save. YM. See that? You create a new Sim account called YM. Now, when you go to trade YM, in your drop-down where you select the account to trade it to, you select YM. When you trade ES, you want it to go to the ES account. Here, let's do another one. Okay, let's suppose you trade NASDAQ. Okay, I want to put an account for NASDAQ. So now when you trade NASDAQ, you send all the trades for this to this account. Okay, everybody see that? RTY, last one. RTY, separate account, separate account. I've got RTY. Okay, everybody see that? Now, when you go to trade ES and you come here to get your results for trading, what you want to do is you want to go from today, say you want to go for a whole week to back to Sunday, and you want to track ES. So you just check the ES account only, that you put all your trades to ES on the ES contract, and then you hit generate. You hit generate, and it will spit out a report. It'll show all your total trades. It'll show all your drawdown. It'll show you how you're doing. It'll show you, losses. Everything will be displayed here. You can slice this and dice this in so many different ways. You can go into daily. You can display it on half hour of the day. You can find out what is the most profitable times for you to trade. Is it the 6:30 hour? Is it the 7 o'clock hour? Is it 8 o'clock? Is there some other time? You can slice and dice all this data up. Okay? And you're supposed to do that for every single one of the instruments that you have. So if you trade NASDAQ, you want to do it for NASI. And you can save these to spreadsheets. Just slice and dice them up. So I know a lot of you didn't do it. I saw a small handful of you did. But pinky swear again with me, please, that you're going to do this for between tomorrow and next Thursday. So when we get together again next Thursday, when I say, did everybody do the account performance thing for the week, everybody's going to raise their hand and say, yes, I did it. I did it on all the instruments that I trade, all the instruments. I tracked how I did. I figured out that I'm not so good at NASDAQ and I shouldn't really trade it anymore. I figured out that Russell was my best instrument, and I generally did pretty good between 7 and 8 a.m. because I was very profitable at that time. And so that's what I'm focusing on trading right now. I noticed that YM, I'm really good at the open. I wait 5 minutes, and between then and 7 o'clock, I just nail the trades. I'm very profitable. That's because my report told me all that. So the reason you're doing this exercise is that you don't go forward in the dark. When you go forward in the dark, you don't know what your results are, and you're speculating on how you're doing, and you're never going to get forward doing that. You just aren't. You're going to be guessing how you're doing. So you really want to do the. So the thing again is you go into options, simulator, accounts. Create one for each instrument that you trade. Crude oil, put CL. GC, put in GC. Save, save, save. Done. Come over here, and then when you go and trade ES, you put it to the ES account, right? You trade RTY, go CRY, gold, etc., etc. Then at the end of each day or every other day, you come in here and you select the instrument that you want to analyze and how you did, and boom, generate report. This is going to change trading. It's going to change your trading, I guarantee you. This is going to give you a whole new window on how you're actually doing. Not speculation of, well, you know, I think I did pretty good on Russell today, but I'm not sure. There'll be no more guesswork about that. This will tell you straight up how you did on each instrument at any given point. Everybody pinky swear. I'm putting my pinky out. We're doing a pinky swear, right? Well, if you're doing chart trader, you simply put pull down of accounts and you put the account on there. If you're doing object trader, it's the same thing. You pick the account you want it to go to, and it sends it to that account. If you want it to go to see, because now what's happening is everybody, you're probably dumping all your trades into Sim 101. Okay, so if you do Sim 101 and you dump all your trades in Sim 101, you're never going to be able to sort out how you did on each individual trade. It's going to be very difficult to sort all that out. So this way, each instrument is tracked separately. You can tell exactly how you did on the Russell. If you're stuck with Sim 101, then the way you do it is this. You can actually probably do it right now. If you go back into your history and you dumped everything into Sim 101, I personally like to silo the accounts. I think it's easier to track all the results. But if you're stuck with 101, then you just want to select 101, Sim 101, and then pick the instrument that you want to separate out within Sim 101. Okay, maybe it's the Russell. Within 101, hit generate, and this will spit all your results out for that instrument. Does everybody see that? Any questions on this? It's really simple. Just go into your control center and set all that up, and then going forward, you can track it all. Each day, you're going to see how you're doing on every instrument. It really makes a huge difference. All right. Now, I'm going to start with gold. So I'm going to pause the screen. I'm going to pull the other charts off. I'm going to blow up gold, and we're going to start with gold. And I'm going to start from the very basic elements of trading, and then like a foundation on a house, we're going to build on it. We're going to build on it, right? Now I'm going to start off with a quiz. Are you ready? How many of you are ready to do the quiz? Are you awake, everybody, still? I know it's late. It's 8:22 back east, probably past your bedtime. We're going to do a little game here. Now I'm going to advance gold from 8:49 this morning. Excuse me. And I'm going to give you a hint. I'm going to help you with this, okay? I'm going to advance the chart, and I'm going to tell you, I'm going to help you in the first part of the analysis, in the fact that it is in a downtrend. And when you see a trade set up, which is going to be a short, okay, so I'm helping you out on that part of the thing, you type in a T. Tell me when you're ready. 8:49, so we're going to go through the whole day on gold together. Ready? We're going to recreate gold as if we're watching it together in real time. And when you think you see a short trade set up, you type in the letter T. Here we go. Advancing the chart. Okay, there's 8:53. Okay, we're at 9:44. Let me blow up the bars a little bit more for you. There we go. 10 o'clock. 1043. Okay, still moving forward. $10.54, almost 11. We're at 11 o'clock together watching gold. Remember what you're doing. This exercise is all about trying to find those short trades together, right? We're looking for short trade. You and me and the whole team and I are watching gold, the gold chart, pretending that we're watching it together, and we're looking as a team for short trade entries. Typing in a T when we see them. I'm going to go through the end of the day. We're almost there. There's 12 o'clock. Close of the market is at 13.15. Okay, there's 11.40. Okay, still going. 12.55, we're coming up on the close on gold. 1:15, there's, okay, now we're going in after hours. Market just closed right here. We're going into after hours trading. Market comes back on. Blowing up the chart a little bit here. You see 15:32, that would have been about 3:30 p.m. my time. After hours trading. Market might be a little thin. And you have to look at the slippage because of the spreads. Excuse me. Okay, there's 442. So this just happened literally like an hour, less than an hour ago. This just happened like an hour, less than an hour ago. All right, I think we're about to run out of data here. Okay, that's it. That's the end. Good. Most excellent. Total gold stars. Total gold stars across the board. Everybody nailed that. Now let's go back and recap how many trades set up and where they were so that we're all clear about this. All right, this is probably one of the most important things about trading is to get, if you can get this part, get those entries, the rest, I'm not saying it's going to be a cakewalk, but I'm going to totally tell you that 70-80% of your battle is done. If you can nail the proper entries, 70-80% is done. Okay? Some of you typed in a T for a short trade when these bars formed right here. Now, from a technical point of view, yes, that is correct. That is a short trade. However, I would say that in the condition that the market was in at this time, in other words, you were going slightly sideways to up, the background was green, and you just came off a pullback here. I don't know if you would have enabled the short side. It's hard to say. But from a technical point of view, you could have boxed it and shorted it there. Yes, that would have been entry number one. And a small handful of you typed that in. So yes, that's correct. Now, another handful of you typed in for trade when these bars formed right here. Now, that is right on the cusp of minimum retrace except. Let's contrast this retracement here. Let's call these trades in order 1, 2, 3. Almost everybody got this one, which is good. And then 4, which is this one. And I think all of you got this one. It's a no-brainer right there, right? So let's look at the 3 of these because I think they provide an interesting contrast into the depth. And let's call this one 5. Okay, let's call this one trade number 5. In fact, let me just put them right on here for the sake of discussion. One short trade 1, short trade 2, short trade 3, and short trade, let me get this over the box, short trade 4 right here, and finally short trade 5 in the after hours over here. Okay, good. There we go. All right. Now, in order of magnitude, just looking at, I'm going to get into the boxing in a second, Paul. I'm going to take some time tonight and really talk about the box thing because I know that's really important for everybody. So we'll get into the boxing in just a second. Before you get into the box, though, you've got to be able to see what's going on. So that's step number 1. Is in descending order, the depth of retracement goes from here, which literally hits the mid band. This is kind of our ideal trade right here. More ideal, if you know there is such a thing as more ideal, it would physically come and sit like literally on the midband. That's like the most ideal trade, in my opinion, from a midband point of view that you could get. But this is pretty darn close. I mean, look at that candle actually kisses the midband, right? Now you can contrast this one with this one. Now this one comes pretty close, but it doesn't quite get there. However, it does close above stealth and line 2. For those of you that are new, stealth is the snaky red line in the downtrend. Line 2 is the straight, sort of jagged upper part of line. We call this line 2. Line 2 is the red straight line, and the snaky line is stealth. So you've got to close above both of those. Closes above over here. Closes above stealth, check 1. Closes above line 2, check 2. The minimum retracement criteria is met. Number 4 is a legitimate short trade, and everybody got that one. Now, that's true of this too. We close above stealth, and we close above line 2 for the short rollover. Almost all of you got that. Now, this is on the cusp. We're not going to talk about the stops yet. I'm going to get into the mechanics of the trade in a second. Okay, I see a lot of questions. Where's your stops? How do you draw the box? I'll get into all that. All of that doesn't really matter if you can't see the trade. Right? All of that doesn't matter if you can't see the trade. If you can't see the trade, then the boxes and the stops don't really matter. Let me go back to number 2. Now, does this bar close above stealth? You know, my machine is cracking up on me. Getting a huge lag in my. The heck is going on here? Look at my. This is not good. Oh, Dennis, you logged out and logged back in, and it's super crackly. Something is messing with the computer. Stand by. Let me try to diagnose it. Let me see if there's some kind of errant program that's running in the background that's slowing the computer down. Stand by. Let me go to applications. Hold on. Let me close some windows here. Let me close some windows. I think I know what the problem is. Give me 1 second, please. Okay, I'm going to try to reboot Ninja. Stand by. Everybody want to hang tight? Let me reboot Ninja and see if I can fix this. I really don't want to restart. I really don't want to restart. The whole webinar. I really would rather not do that. Okay, I'm rebooting Ninja. Shutting Ninja off. Stand by. Okay, now Ninja is off. Is that better? See, I've been running Ninja all day. I mean, since like, 5 o'clock in the morning. This thing has been running all day. Plus many other windows open, so it must just bog it down the machine. Is that better? Can you hear me now? With I just have GoToWebinar on this machine now. I don't have anything else on. Much better. Okay. So a kernel must have been running amok in the memory. That happens. Audio's good now. Okay. We can hear you. Audio is good. Okay. Rebooting 7. Seven coming back up. Getting ready to reconnect to the data. Sorry about that. From now on, what I'm going to have to do is just before I start the webinar, just reboot the whole machine, shut Ninja off, just shut the whole machine down for like 5 or 10 minutes, let it cool down, and then pull everything back up. Okay, Ninja's coming back up. Hang tight. 1 second, please. How did everybody do today? It was a little bit choppy early, and then we got some big runs. Remember that big run on YM? I think it was huge. Make your whole morning, something like that. Hold on, Ninja's coming back up. Here come the charts. Hopefully I don't go back into a garbled situation here. Okay, everything was saved. Connecting to the data source. Stand by. Connecting to the data source. Here we go. Can I still program an IBM 360? No. Back in those, I was in a different business back then, back in the old heyday of IBM mainframes and all that sort of stuff. I was This is getting my goat tonight. I'll tell you that. Oh, man, you got to be kidding me. Testing audio. 1, 2, 3. Is the audio and the visual coming through? Yes. Okay. All right, we're back in business. We're back in business. Sorry, everybody. Okay, so let's finish the recap here. So 5 was good. It touched the midband. 4 is just under the midband, but it meets the criteria. 3 meets the criteria, and 2 is right on the cusp. When I say on the cusp for minimum retracement, did this bar close above the stealth line? Yes, technically it did. Did this bar close above line 2? Not really, kind of. But, and we talked about this one. This would have been the early adopters, and the fact that your background was green, you were sideways to up, and you might not have had short enabled here. But let's talk about, I really want to use this as a microcosm to talk about the notion of thrust and retracement. And let me do it like this. I want to get really detailed about this because this is what's going to help you succeed and make money. If you want to trade these markets when you're in a downtrend, what's physically happening in the market is that market participants in gold at around 9:35 Pacific time, a combination of sellers and sell programs entered the gold market and began to push the market lower, right here like this. What happens with these programs and traders like you and me and everybody is that when markets make a movement, in the case of this case, the thrust is down. Okay, that there's going to be some short covering. The short covering creates an upward draft, like such. It is the retracement or the short covering. It's not really a rally, but it forces the market to go in another direction, which is up against the trend. It is in these retracements in which we take our trades. Now, from a conceptual point of view, I think we all would agree that's pretty straightforward. Okay, I get it. Thrust, retracement, thrust, retracement. We are retracement traders. Okay, I get it. Now, the question then becomes, where do you get in? I'm not going to address this one right here because I'm going to say that this is too shallow retracement to really take the trade. If you'd thrown a little box on here, you got filled short on right here, and you would be in. Maybe you got a scalp, maybe you didn't. Now, if you're going to use tight stops, in the room you will hear the difference between tight stops and loose stops. When you're dealing with a situation like this where the market's going down, you have two choices. You can put fixed targets in. Fixed target is where you go into your instrument and you study it and you find out with a high degree of certainty how far it moves before it retraces. This is called the sweet spot of your target. Let's do it in gold. Let's look at these 5 trades and see how much each of them could have made from the entry point to where it bounced. And we'll just keep quick track of it. Let's say you got in this one here at 85.50. I'm just going to use round numbers here, and it got down to 84.10. That's 14 ticks. 14 ticks. Okay. You got here, and it went down. Round number 84.10, and it went down to 83.10. 9 ticks. Here you got in. I don't know, either here or here. Split the baby, 83.80, and it got down here to 18 ticks. This one was a longer one. Here, if you got in at 82.90, it got all the way down to, so that's 23 ticks. So 23, 14, 9, and 18. So run an average on that. I'm not going to do it. I'm going to guess it's what, 15 probably, something like that. So here's the thing, maybe it's 12. So you can put a 12-tick fixed target out there and have some degree of certainty it's going to hit it. It would have hit it on this one, a 12-tick target. It wouldn't have hit it here. It would have hit it here, and it would have hit it here. Now, in the case of this trade right here, 12 ticks down from here would actually be 81.70, which is right here. So you choked off the last half of the trade. Everybody understand what I'm doing? Everybody following me here? You go in and you study your instruments and you see what the average move is before retracement occurs. That's called the sweet spot of your target. You want to calculate that average, and that's generally where your target's going to want to be. Now, there is going to be an occasion where if you have a 12-tick target and you get a 24-tick drop, you're going to choke that trade off about halfway down right there. And so you're going to miss the rest of it. Or if you have a big 50-tick drop and you're trailing the stops, you choked halfway off. Now, the other way to do that is you have a very close target, like say 7 or 8 or 9 ticks, or whatever, 8 ticks. So you pull one off here and you put 2 lot on, and then you have a running trail. Now, I won't talk about trail stops on this, okay? The tight stops you hear in the room, there's no real mystery to them, and you can track them on your own. And you can have Object Trader do it automatically. You don't have to do it manually. But if you do it manually, can you see where the stealth and line 2, in the case of the short, are sort of following on down? The tightest stops that you can have, when you hear the term super tight stops, is the static back? Are you kidding me? I'm going to turn this fan completely off. Hold on. How's that? Is the static back or gone? There's static right now. Really? Static right now. Testing. 1, 2, 3. Is there static on the line right now? Yes or no? There's still a little static there, but we can hear you fine. Should I? I've already unplugged the mic in twice. I don't know if maybe, I don't know. This mic's fine. We've got about 15 minutes 15 minutes left in this webinar. Do you want to just proceed and finish it? Yeah, let's just power through this. There's a little bit of static. My apologies, everybody. So here's your options when you get into a trade like this. Okay, you got several options. The first one is that you put 2-lot on, and you have what's called a scalp trade that gets out somewhere around 6 or 8 ticks, and you lower your initial stops from 12 ticks to right by your entry, 2 ticks behind your entry, and then you have a trail. The way the trail is going to work is that you want to follow line 2 and stealth down like this. I'm going to show you it. It's going to follow it down like this, follow down, and then when we say you want to fade it a little bit, what does fading mean? Fading means you're not right on it. You're a couple ticks above it. See how you get divergence from stealth and line 2 down here? See how there's divergence as this gold market bottoms out down here and tries to find a bottom around 80.50. These start to go a little divergent in the fact that the stealth line is following this a lot closer, and line 2 is way up here, and the mid band is way up here. Now, in cases where you have very huge trend moves of 100, 200 ticks, it's not unusual to have a loose stop all the way back up here at the mid band, even realizing that between here at 80.50 and the mid band here is over 20 ticks. So if you don't want to give 20 ticks back, you've got to go with the tighter stops. The way you do that is you track down line 2 and stealth as such, just like I'm showing right here, and you would have been taken out on the close of that bar right there. That is how you catch a runner in a move. With regard to the other contract, here you're taken out. If you put the 2-lot on, you get your initial stop down here when the scalp fills, 2 ticks behind your entry, and then you do the trail. Let's do another one. Here's number 3. You're filled short on the close of this bar right here. Your 8-tick scalp comes off somewhere, let's see, I don't know, you're filled at 83.60, 50, less 9 is 83, somewhere down in here is your 8-tick scalp. If you put 2-lot on. And we just determined that with an 8-tick scalp, you can hit that with extreme regularity, but you choke off some trades. Okay, so that's what that's what your trade-off is. And then as you can see here, that your trail would have been taken out here. Here's your trail come down when you hit your scalp, 2 ticks behind your entry, and you trail down stealth and line 2 like such. Somewhere in here you get taken out. Now over here on trade number 2, if you took it, by the time you got filled and got out, you barely made anything. It's almost a scratch trade, and you didn't hit I don't think you hit an 8-ticker. You got filled at 84.10. You would need to get down to 83.30. Oh, yeah, you would have got it. You would have got the 8-tick right here. See, this is how you figure it out. You've got to go back in and look at your instrument and what it does. Each instrument's a little bit different. The Russell's different than gold. Oil is different than YM. They're all a little bit different. You got to figure out the sweet spot of your targets. Now let's talk about trade entry. Is everybody clear what we're doing here? I'm going to erase all this, and we're going to go back and talk about trade entry. Okay? Can I erase all this? Everybody got it? And I don't see any more questions on it. Do you understand what we're doing here with the scalp targets and the trails? That's really critical. I mean, that's good trade management. Drawing tools, remove all drawing objects. Okay, gone. Now, let's talk about the retracements in and of themselves, and how and where to draw boxes. All boxes are not created equal. I'm going to focus on these 3. Can you see that in the retracement, for the most part, the bars are doing what in a downtrend? In a retracement, the bars are doing what? What direction are they moving and closing? So in the thrust part of a downtrend move, the bars are primarily going down. This is the thrust part, right? Here's the thrust part, You see that, right? When we start to retrace, the bars go the opposite direction, so they start closing up. Now, this is a really simple thing to learn, but it's very powerful. Here's what it is. Can you see how these two bars sit right here at this swing? Right here. And then this bar closes up, and this bar closes up, and this bar is stuck right here, and this bar is here, closing up. Now, let me pop quiz, make sure you're awake. Is this a legitimate short entry? Yes or no? Is that a legitimate short box? 5 seconds on the clock. Is this a legitimate short box? Yes or no? 4 seconds. Just type in, just hit an N. Hit an N or a Y. Boom. 3 seconds. Legit or not? 2 seconds? No. Closes above stealth, check mark 1. Close above line 2, do we get a check for that one? No. Not legit. Now, we resume the upward movement here. Now, at what point do the bars start going back down? I'll give you 3 choices. 1, 2, oops, I don't know what the heck that was. 3. In this candle formation, which one of these bars starts going back down? 1, 2, or 3? Now, does anybody know what kind of candle this is right here? What kind of candle is? What's the name of this candle right here? What is that? What's the name of this candle? Anybody read Nissan's candlestick book? I have a whole shelf full of them. Is that 3 marching soldiers? 2 black row open windows? Remember all the ridiculous names he had for those? That's a hammer, a hanging man, a doji. What does that mean? What do dojis mean? What would a doji mean in the context of this retracement? What does a doji mean in the context of this retracement? You want to see another one? How about this one right here? There's kind of another one right here. You see another one? How about this one right here? How about right here? What about that one? Do you think dojis are important in retracements? Do they have any relevance to what we're trying to do here? Yes. It's one of the few bars in this whole reversal pattern that is actually closing down, with the wick remaining very high in the fact that what's going on in the context of this bar? Well, short covering was trying to push it up, push it up, push it up, push it up. It reached resistance right here at 84.80, could not go any higher. And when a bar closes down, that's extremely bearish, because what that is telling you is that the selling forces are starting to resume. And that is further confirmed by this bar right here. In order to get a good box, you normally have to have at least 3 candles. You can do it with 2. This one over here, you could make the case that this was somewhat of a small doji. And if you'd drawn a quick box with the bar next to it, the box would look something like this, engulfing the wick of this candle and the top of this doji candle here, and you'd be filled short on this bar right here. Let's do the same exercise over here. Here we have a bar that was going up. We have a doji candle, and we have another bar forming here. So the formation of this box looks like this. You engulf the top of the doji, you engulf the bottom wick of that last up candle, and you're filled probably on the close of this bar right here, if you drew it correctly. Okay, let's do another one. Here we're coming down. This is the thrust part of the move. in the direction of the trend, which is down. Here's the thrust. We stop out of the trade. We're looking for re-entry. Here are bars going up, bars going up, bars going up, and then we get the doji. Now, this is a more complex pattern in the fact that it's not 2 candles, it's not 3 candles. There are more candles forming here. Can you trade at the doji? Sure you can, Ben. There's lots of ways to get in up here. I'm just showing a box. You could use your ray tool in Object Trader and draw a ray like that. You'd be filled on the close of this bar too, right here. We could put a market order in up here. You could put a limit order under here. Put a limit order in and you close that bar. You're filled short with a tight stop just above it. Absolutely, you can get in at the doji. No problem. You don't have to draw a box. Lots of different ways to get in here. Limit order, market order, ray, box. Now, let me ask some questions here. This secondary box, this third trade box, is a little more complicated in the fact that you could start drawing it like this, which would extend it over to here like this, and you would be filled on the close of this bar right here. Yeah, just hit the market sell. Right, Robert? Yeah, there's bar close. Yeah, you could turn bar close on in here as the retracement's coming. You see, maybe you're in the live room and we're calling out, levels in here. If it hits, 84, they hit just under 85. Look for a roll short, limit, market order, however you want it, by hook or by crook, you're short in here. Yes? Everybody see that? Same situation over here. Now the difference is it's not a 3-bar rollover. Technically, you've got kind of a 1, 2, 3, 4, 5, 6, 7 bars, and you're filled on the short on the close of this bar right here. So generally speaking, what you're going to want to do is you're going to want to find the bars that are close to the doji bar, and that generally is going to be pretty much the bottom of your box in the case of the short. The reverse would be true on a long trade, and we're going to look at that. We're going to look at a long trade where we have a doji reversal, and then we look at the candle next to the doji, and that establishes the box. Everybody see that? So what am I talking about? Well, here's what I'm talking about. I'm talking about this candle right here is forming the bottom of your box, and the top of the doji is the top of the box. But there are other ways to get in: market order, limit order, bar close, ray trade, etc. So that's how that one works. Let's come over here. Many of you got this one. Where is the bar that's located next to the doji bar? Oh, my computer's slowing down again. Dagnabbit. Right there. So the bar next to the doji bar establishes the bottom of the box. That would be located right here. And you go up to the top of the doji candle, and that is the top of your box. And you're filled short on the close of this bar right here. Do you want to look at some long entries on another instrument? Is that helping at all with trying to see where the trade is? What you're doing in a retracement essentially is you're trying to find the apex, in this case, of the short covering. You're trying to figure out where that short covering has exhausted itself and is no longer going in the retracement direction, but is ready to roll over and begin the selling again. Does that help? But you've got well, there's a question: should you start boxing here? Could you have boxed here? Well, I don't see a doji candle in here really. The doji really doesn't occur until here. This is where the trade took place, over here. You want to look at oil? Yeah, sure. I was just going to drag an oil chart over. Let me bring oil over. fact, the oil just had some trades set up. Let's look at the oil trades. Let's do the quick couple exercises on oil together. You don't always get a doji, but you can look at bars that are located around support. Or the doji might be in a mix with other candles. Let's look at some examples. Here's crude. Let's look over here to the right in the long trades that's set up, right around the mid-band. Where is the doji located on oil in this pattern right here? 1, 2, or 3? Where's the doji in this candle pattern right here? Clearly 2. Which is the bar next to the doji? Right here. Where's the box? Box looks like this. Filled long right here. Okay, let's do this one. Where's the doji in here? Let me give you letters in the second one. Bar A, bar B, bar C, or bar D? Which one in these 4 bars is the doji? 1, A, B, C, D. A, B, C, D. B. B is the doji. See it? Where's the bar next to the doji? Right here. Where do you draw your box? Like that. B has a long tail, closes down. You know, they could either close down or up. In the case of a doji at or around support, even if it wasn't a doji, you're sitting right on the midband. It's a legitimate midband trade either way. How about here? Is this a doji and this a doji? Right here? 2 dojis? What would that box look like? Would that box look like something like this? Here, let's do one over here. How about over here? This literally happened just a few minutes ago. This literally happened a few minutes ago. Here you hit resistance twice. Boom, boom. You're retracing. And you're tracing. You're retracing. Here's the doji bar right here. Market order, limit order, bar close, turn on bar close. You'd be filled on that bar right there. Now, if you drew a bigger box, then you probably weren't filled to the close. If you actually drew a box, you wouldn't be filled to the close of that bar. Sometimes getting in that way it gets you in a little bit late. So if you see dojis bouncing around support, you can put a market or limit order in there and just take it, or bar close. Turn on a bar close, and so you're filled. So instead of being, here's an example. Here's a big difference. Instead of being filled on the close of this bar, you're filled on the close of this bar. See the difference? Let's do some more together. You want to look at one more instrument? That was oil. You want to look at YM from this morning? Let's get YM down here. Let's get YM, then we'll do the Russell. I'm going to go a little over because of the technical problems we had, and we got a little bit of a late start, so I'm just going to keep going here until we run out of gas. Let's go back to the Weimar Open, talk about how we could get in those trades. Okay, let's look at the open of YM here together. Right around the open. Had quite a nice long run that could have made your whole morning on a couple of 3 contracts or even one. 6:30 Pacific is right here. This is when the equity markets open, right here. Right about there. Okay. So right at 6:30, you had this retracement here. And I believe we called it out live in the room. So my question is this a legitimate trade long on YM, yes or no? I'm going to do a series of these questions in a row, back to back to back, and you're only going to get 5 seconds on each one of them. We're going to look at a whole ton of YM trades in the next 60 minutes. You're going to get 5 seconds on each one, and all you have to do is hit Y or N. First one, yes or no, 5 seconds on the clock. This is trade number 1 on YM. 4 seconds. Cast your vote. This is the last exercise we're doing tonight, so feel free to jump in and do it. 3 seconds. 2 seconds. Time's up. Yes, that's legit. Close below stealth, check mark 1. Close below line 6, check mark 2. Legitimate box just above the midband, totally yes. Now I'm going to do a series of these together, and they're all going to be grouped together in a collective question of legit or not legit. I'm going to do them like this, because they're all about the same. These 3 boxes, legit, yes or no, 5 seconds. 4 seconds. Type in a Y or an N. All 3 together, not separately, all together. Y or N, yes or no, legit or not? Two seconds. Time's up. Yes. Close below stealth in line 2, check. Close below stealth in line 2, double check. Close below stealth in line 2, triple check. All 3 of those are legit. Okay, how about this area right in here? How do you feel about right in here? Yes or no? Legit? Long? Yes or no? Legitimate long trade on YM, yes or no? Now, right here, you would have been about 6:45, so you're about 15 minutes into the trading session. 15, 20 minutes in. Yes or no? 5 seconds on the clock. 3 seconds. This little box that I drew right here, right around 6:45. 2 seconds. Cast your vote. Time's up. No, big negatory. No, 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 no. Check mark close below stealth, check mark 1. Close below line 6, no, negatory. This is a big no-no. Not deep enough. How about over here? How about here and here? There's almost a doji in every one. You see that, everybody? You know, everybody's noticing that? I sort of watch that, but I'm actually paying a little more attention to it than I have in the past. But while you're pondering these 2 boxes, let me just go ahead and circle them. Here's a doji right here, and that marks the low point of that box right there, doesn't it? Here's one right here, marks the low point of that box. Here's one in the no-no box right here. See it? Here's one in the yes box right here. In fact, there's almost always one. See it? See them? Everybody see these little dojis? Mark the bottom of the swings. You should start looking for those in your retraces. See the little dot and the bounce? Yeah, this is yes. This is all yes. Close below stealth, check mark 1. Close below line 6, check mark 2. Almost to the midband. Legit. Legit. Totally legit. How about over here? Is this a box right here? Is that a legitimate entry? I'll help you with that one. Of course it is. It hit the midband. In fact, the doji hit the midband, for Pete's sake. Look, the doji actually hit. The apex of the doji hit right on the midband. The yellow dot appears when the bar forms. When the bar finishes and the doji is complete, the dot prints. See that? All right. Let's do another one. Let's do another one together. Let's do one more together. I'm going to do this exercise on YM, and then this is going to be it. Well, Vin, tell you what I'm going to do. In the next webinar, we're a little long about 10 minutes over, and I'm going to wrap in a few minutes. Do this as a favor, Vin. Everybody try to remind me. Next Thursday when I do this webinar, at the very beginning, well, you would exit like we talked about, right? How do we? That was one of the first things we talked about when we started, right? What are the exits, everybody? Anybody remember the exits? What were the exits when you get in these trades? What were the options for exits? Remember we talked about that? Some of you may have come in late. That's okay. All right. So you can have a fixed target. If you're trading 2-lot, you can have a fixed target for a scalp. Say it's 6-8 ticks or something like that. Get your stop up 2 ticks of break even from your entry, and then you trail the stop on the runner. You use a combination of either line 2 and stealth or line 6 and stealth on your trail. Here's your trail right here, like this. Get taken out on the close of that bar right there. That's your runner. If you don't want to do the trail and you don't want to do the scalp and you want 1 lot, then you got to figure the sweet spot out of how far your instrument runs. If that number is, say, 12 or 15, then you go out and you put fixed targets at 15. And you have a high degree of certainty that you're going to hit that. But even if you put it at 15 and it doesn't get it, you still have to do some kind of trail stop. In the case here, for instance, here you didn't even really get a stop off. Depending on where you got filled, you barely got a scalp out of it. And then depending if you had an entry 2 ticks behind your entry, this stopped you out right here. So maybe you broke even or lost a tick. Same here. Now this turned into be a huge runner. Okay, this trade right here was huge, and you're probably looking at like 40 ticks or more. So if you choke it off at 12 ticks, you miss the last 30 ticks. Oh my goodness! Don't tell me this screen is paused. I was talking about right in here, right? 8 ticks, 15 ticks. If you're trading 1 lot and you want to catch the runners, then you would not have this fixed scalp. I guess that's what I'm trying to say. You say, look, I can't, I'm got a modest account. I can't put 2 lot on just now. I'm still learning. If you're trading 1, then you pretty much want to go for the runner every time. Okay? Because if you put like 8 ticks things in there and then you take a 12 tick hit and you're trading about 50% accuracy, you're never going to make any money. You've got to get the runners, right? Your average has to, if your average stop out is 10 to 12 ticks, then your average winner has to be more than that, right? If you're trading 50-50, let's say you're just a 50-50 trader. When you pull the trigger, there's a 50% chance you're going to make money and 50% chance you're going to get a loss. And let's say your average loss is fixed at like 10, 11, 12 ticks because that's an object trader. Okay, so then what does your runners need to average? Well, for 2 to 1, they got to average like around 20, right? Everybody following that? So if let's say that you're a 50-50 trader, and you look at your average loss, and your average loss is somewhere around 10 to 12 ticks. So your average win needs to be more than that. It can't be that, or you're not going to make any money. The only person making money is your broker. So your average win for a 2 to 1 has to be what? 20 plus ticks. Now, when I say this, I'm talking about average. I'm not talking about every trade. A lot of people misconstrue what I'm saying here. They're saying, oh, well, he's saying I can lose 10 to 12 on every trade, and I got to make 20 ticks on every trade. Well, did each one of these trades I showed you here make 20 ticks? Did all of them make 20 ticks? Some of them made 20 ticks. This one probably made 20 ticks. This one didn't. This one didn't. That one didn't. This one did. This one didn't. That one didn't. This one did. So you can run the average on that, you know, and if you're going for runners, this was the big runner of the morning right here. This one probably made you like 40 ticks. So you had 40 ticks. You had, you know, I don't know, 2 ticks, 1 tick loss. This one maybe made you 15. Maybe you got some scalps in here of a couple of 5 ticks each, and you started off with maybe a 15 ticker. Color background is green, Robert. Is everybody seeing a green background? You can add more in a pullback. That's a whole different strategy, Ven, but that is possible. It is possible for you to take an initial entry way down here. Here's what Ven is asking. What if I put 1 or 2 or more lot down here, and then each time it pulled back, I could add some? Yes. In the case of doing that, when you added here, you would get a blended average. So it would take the blend of wherever you got filled here and blend it with your initial fill, and this would drag your blended average fill probably up into here somewhere. You know, depending on how many, you know, the weighted average, you know, if you put 2 on here and you add 1 there, you know, maybe it's down more like that. Yeah, it's a green background with blue bars. YM was in a huge, massive 100-tick run up today. Yeah, we caught it in the room. I caught it personally. It's beautiful. Here's a deep pullback right here. I think Gary called this. We still in the room? It's almost 8 o'clock. I don't know if we caught that or not. I know I stopped out and I was done before 8, so I don't think I got that one. I stopped out up here and that was it. And then it had a massive follow-up at 9 o'clock. You see that? See the buy programs going right there? Here's another little doji at the bottom of this retracement right here. See it? One right there. You don't always get them. Here's one right here in this little box. Didn't put the dot on, but it wasn't right at the bottom. All right, well, thank you for coming, everybody. This is a wrap. I apologize for the technical problems. We got